Hello, everyone, and welcome to today's live stream. So today is it's an interesting choice to talk about Warren Buffett and what he brings to the table, especially with what he and Charlie Munger have said in the past about Bitcoin, the entire crypto market in general, about how it's rat poison squared, how it's never going to anything, and just how it's just downright awful it actually is. But regardless of all those things, when there is some great information and some great knowledge to pass down, I will share it, even though there's somebody who obviously hates exactly what we were doing and what we're actually investing into. So, what I'm talking about is there was this great little snippet today, and this is from Warren Buffett. He's given his speech at one of his shareholder meetings, and he talks about strikes and how many you should take and how you should lean into different things. And then also in the end, it talks really about just how important it is to just hold your ground, because you don't have to take all the strikes that come at you. And I thought it was a pretty good idea, especially right now with the altcoin season heating up. I mean, exponentially. You cannot swing a dead cat without hitting a YouTube video about an altcoin going to 100x. And I think it's going to get even worse as time goes on. So I want you to put this in perspective from somebody who absolutely hates what you're investing into. So just take a listen to this. It's about 1:43. It's going to make a lot of sense.
Ted Williams wrote a book called The Science of Hitting. And in The Science of Hitting, he's got a diagram, shows him at the plate. And he's got the strike zone divided into 77 squares, each the size of a baseball. And he says, if I only swing at pitches in my sweet zone, which he shows there, and he has what his batting average would be, which is 400. If he had to swing at low outside pitches, but still in the strike zone, his average would be 230. He said the most important thing in hitting is waiting for the right pitch. Now, he was at a disadvantage because if the count was 0-2 or 1-2 or so on, even if that ball was down where he was only going to bat 230, he had to swing at it. In investing, there's no called strikes. People can throw Microsoft at me and you name it, any stock, General Motors, and I don't have to swing. And nobody's going to call me out on called strikes. I only get a strike called if I swing at a pitch and miss. So I can wait there and look at thousands of companies day after day. And only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it, fine. If I miss it, it's a strike. But it's an enormously advantageous game. And it's a terrible mistake to think you have to have an opinion on everything. You only have to have an opinion on a few things. In fact, I've told students, if when they got out of school, they got a punch card with 20 punches on it, and that's all the investment decisions they got to make in their entire life, they would get very rich because they would think very hard about each one. And you don't need 20 right decisions to get very rich. 4 or 5 will probably do it over time. Ted Williams.
And that's it. And doesn't it make a lot of sense? Especially like the part where he said you don't have to have an opinion on everything. Like on this channel, I pretty much talk about the same thing over and over again to beat into people's heads. And there's some different strategies that people will call out. What about this coin and that coin? And I always tell the same thing, like, well, I don't invest into it. I don't know about it. So I'm not really going to comment on it. And I think it's one of those different pieces that people look at this and go, maybe you just, you need to know all these things that's going on in the crypto space and everything that's going on. You don't. I think it's a misnomer for people to say that you have to know every single thing that's going on. I think you just have to do what Warren Buffett said, which is if you understand what you're investing into and you're passionate about it and you want to take that swing, then take that swing. But it's not like you have to take a swing for every single one of there. And the last thing I will say about this before we move on is when he talked about that punch card. If you had an opportunity to invest in 20 things only in your life, and one of those things, could be your business, could be another business, could be investing into your friend's business, or it could be investing into some hairpin idea that you may have. Or maybe it's something that you want to get into, like for real estate or for land, or maybe precious metals, or another type of company that deals with mining, or maybe it's cryptos and digital assets and things like that. But if you really think about it, if you think about what's the best option for you, is it spreading everything around and do like a spray and pray type of strategy? Or is it just saying, you know what, I think I know what's going on here, and whatever that project may be, I've done my research and I feel really comfortable with doing this and I want to hold on for the long space. I think the people with the convictions, like a Warren Buffett, the reason why they're so successful is that. And you may notice that a lot of the people that have a lot of the wealth, they're not day trading, they're not scalping, They're just doing their due diligence and sticking around for the long haul. And that's pretty much the secret. So anyhow, let me know what you think about that in the comment section. And then let's talk real quick about some things that are going on in the space itself. And then we'll get into a little Q&A. It's going to be a little bit quicker. So we talked about some positive things, about what you should actually take a look at. You need to know about these things. These are important. So as far as like with Bitcoin, the things that I get as far as like with El Salvador and moving into Argentina and the different opportunities that are there, I always say the same thing. What about, just basically buying things? And everybody will say the same thing. Lightning's the answer. It's the end all be all. And it may be, but this was an article that made me pay attention. This was just today. Lightning developers must wake up and fix security bugs, not please the venture capitalists. This is from a Bitcoin developer. Antoine Riard left the Lightning Network in October, argues it's also at risk of becoming increasingly centralized and susceptible to single points of failure and censorship risks. Here's what's happening. And it's pretty technical. I linked the description. You can check it out. But this is what he says. They, the developers, need to wake up, stop the sleepwalking, go to the whiteboard, design a robust and sustainable fix in hand with other developers at the base layer, preserving the long-term decentralization and openness of Lightning. Riard also claimed that many Lightning-focused firms are compromising Lightning's mission. The sad fact being most of them are working for VC-funded entities. Look, you got to pay the bills, right? But sometimes it gets a little bit too centralized. Commercial entities with the same low time preference to the long-term detriment of end users. Centralized systems are great in the scale of efficiency. That's what we've done so far with the internet. It's worked pretty well so far. But the problem is you have a single point of failure and lower cost of user censorship. Fundamental risks, you might want to hedge against a Bitcoiner. I'm not sure this is an interesting Lightning future. I don't wish to be associated with being in charge or accountable for the Lightning Network and the 5,300 Bitcoin exposed. There is little I can do to halt the hemorrhage without compromising the core values of censorship resistance and permissionless of the Lightning Network. So I know we want Lightning Network to work, and we feel like it could be the best thing as far as like a lit layer 2 and then for payments and things like that. But there's the negative side of it. But for every positive, or negative, there's a positive as well. And this is a rhetorical, I believe, another developer. He says Lightning is the best solution, but it's not good enough. We need to actually improve it. And then we've got Robin Linus says, don't get me wrong, Lightning is great. Always still amazed when using it. The point is that it can't scale enough. And Arc is not a competitor, but more of an add-on. Gives you all the advantages of Cashew, but without requiring trust. All we need is covenants. And then it goes on some other stuff. And this was interesting to me. Riard, the same guy we're talking about, explained that Lightning hasn't seen as many attacks as Ethereum Layer 2s because Lightning users typically only store a small amount of funds in their wallets at any given time. The question, I guess, would be then, what happens when people start storing more funds? They're more susceptible to hacks. And this was also interesting. A total of only 194 million in Bitcoin is locked in the Lightning Network. It's not that much, according to DeFi Llama. So again, we know that technology doesn't come out the gate and work perfectly every time, but we can see that there's a little bit of problems and maybe a little hiccups going on in Lightning Network. Hopefully they can resolve it. We can actually use this for the payments when we see mass adoption. Anyhow, let me know what you think about that in the comments. And then last two is pretty positive, actually. Cosmos. It looks like they want to do a hard fork, want to do a chain split. And because of that, well, not because of that, but Atom's down 3%, but everything's down today. So I can't chalk up to that. But here's what's going on. So if you're a Cosmos holder like myself, this will affect you. Cosmos founder Jay Kwan favors splitting the blockchains into two following a decision by the community to reduce Cosmos native token Atom's inflation at 10%. I don't know about you, but for staking rewards for Atom and Cosmos, it's huge. So when they want to reduce this, I thought it was a pretty good idea because I think they were inflating things away. The hard fork dubbed Atom 1 could be bullish for Atom, and I'll tell you why. And Kwan said, let's coordinate a split following a decision by the Cosmos community to approve a proposal to reduce Atom's inflation from 14 to 10. The approval change is projected to bring down Atom's staking yield from 19 to 13.4. All right. Kwan states, despite our voting against the plan, 848 has ended up passing, something that isn't too surprising. But let's see what we can do. I believe that the final plan should include an integration of Atom and Atmo/Atom1 so that instead of mass selling Atom and collapsing it, we allow participation from Atom. But that's in the README can be improved. Tokenomics, people take a shot. All right, whatever that is. An expert on Cosmos and head of strategy at Stride Zone A potential hard fork could resolve years of community infighting. I didn't know there was that much infighting going on, but apparently it is. And bode well for Atom token holders. And this is why. This is why I thought this was a great article. A fork would be very bullish. Political tension has impeded the development, most notably when the Atom 2 had vetoed in fall of 2022. Galt explains the hard fork to lead to the biggest airdrop for Atom and could result in a massive increase in trading volume for both Atom and these new Atom 1 tokens. This is the same thing that happened back in 2017 when when Bitcoin forked to Bitcoin Cash. I don't know if everybody remember that. But you could get a huge amount of Bitcoin Cash. It was actually very profitable too, because Bitcoin Cash went to like, I want to say over $1,000. And you didn't even have to do anything. All you had to do is hold one Bitcoin. So I don't know when this is going to happen. This is in the preliminary state, but Jay is calling the new chain Atom 1. Most of Atom 1 allocation will go to Atom stakers, pro rata. Unclear if liquid Atom is included. So I'll keep you updated on that one. But it looks like if you're holding Atom, you could be susceptible or receiving a pretty nice, sweet airdrop for just holding some tokens. And then lastly, macro. And macro is the big story, and it really drives all markets. And when we see stories like this, it looks pretty positive. So the Fed likely to be dovish in 2024. Traders expect the Fed to cut rates by 100 basis points next year. And this is why you've probably seen, actually, you know what? Let me see something. What has the S&P 500, S&P 50, sweet Joseph? Yeah, 5 days. That's weird. Yeah, probably about the same. It's not too bad. But it looks like the Fed's going to cut 100 basis points by next year. This will weaken the dollar, incentivize risk-taking in crypto and traditional markets. But there's something that's not said in this article, and I'll get to that in a bit. So according to ING, U.S. economy and the inflation rate are expected to slow next year, as if it's not doing already, allowing the Fed to pursue a looser monetary policy. Bank of America said the tide is turning for the greenback, and it can start to adjust broadly. And Bank of America states, while we still envision the U.S. performing relatively well next year, vis-a-vis other major economies, the prospect of an eventual economic landing and corresponding Fed easing should provide broad relief to currencies across the globe. A weaker dollar often becomes a tailwind to risk assets, including Bitcoin, blah, blah, blah. And it's true. If we take a look here, there was a chart that I put together. When the Dixie is just, it's just how strong the dollar is against a basket of other currencies. You've got Canadian dollar, the pound, Japanese, whatever. I always get these ones confused, but you can just see that as the strength of the dollar increases, Bitcoin goes down. And we saw it in 2013. And in 2014, when the Dixie went down, Bitcoin went up. And it happened again in 2016, 2018, happened in 2020, 2022. It's the same thing over and over again. When the dollar weakens, Bitcoin goes up. So when you hear about this happening, the dollar weaken, don't be concerned if you're an American. Just be concerned if you didn't buy enough Bitcoin. Then on top of that, as far as like the target rates for the Fed, this was in the books. And now you can see that as far as the next meeting, which is 13th December, everybody's expecting the federal funds rate, terminal rate, to stay the exact same, 525 to 550. There's only 3.2% of crazies who think they're going to raise it, but maybe. And then in January, they think it could be the same, maybe a little bit more of an increase of raising in January. But and then in March, it looks like about a quarter of people think they're going to cut. And then in May, looks like they think they're going to cut again. And then in June, even more so. And then July, more so. So that's good news as far as the rates and cutting. It means that they did their job. But just remember, I will remind everybody, every time that there is an inversion and they cut rates and they turn around, this is a spread of the 10 and 3 month. Every time they do that, and there's an inversion, uninversion, you get a recession. That's what these little gray areas are. Now, true, people will say, but Rob, what about 1966? That didn't happen. And you're right. 1966 didn't happen one time. Let's see if it continues that trend or not. But you can see it happened in 69, it happened in 73, it happened, Jesus, a bad one. 1979, 1980, same thing over here. 89, here's a big dumper in 2000, 2001. Small one here in 06 to 07. We had a pretty large recession. And of course, during the cerveza sickness. Then look at the depth of this one. This is what concerns me, because the depth of the inversion is one of the things that people always look at and say, well, now that we get to this point, what happens? Usually recession. The question is soft landing, hard landing. And of course, nobody really knows for sure. One thing that two analysts can always agree on. That one's the third one doesn't know what they're talking about. And that's it for today. So look, if you like today's video, give it a thumbs up, consider subscribing. I'm going to talk about is time sensitive. And yeah, sorry about my voice. For some reason, feels fine. Just for some reason, just hoarse-ish. Who knows? Maybe it's all the meds I'm taking. But that's it for today.